Welcome to Mechanical Markets. Today we are going to be taking a look at Tesla to see whether or not this is a good stock to buy going into 2025. Before we start this video, it's important to say I'm not a financial advisor, I'm just an idiot. However, if you would like to subscribe and like the video, that would be greatly appreciated. So Tesla are currently having a pretty good year as they are up 36.69% on the year-to-date chart, with the vast majority of this growth being since the election. Within the last month, they are up 53.89%, as at the start of the election they were at 250 points approximately, and they are now at 339 points. This isn't just due to the election, of course, this is due to a really good Q3 report, where profitability was at $2.7 billion and net income was at $2.2 billion. With an outstanding cash flow of $6.3 billion and a free cash flow of $2.7 in Q3, with the outlook going forward into Q4 being really positive. On the Q3 statement it says, our company is currently between two major growth waves, the first one being the global expansion of the Model 3/Y platform, and we believe the next one will be initiated by advances in autonomy and the introduction of new products. Going on to the cash section, it says that we have significant liquidity to fund our product roadmap, long-term capacity expansion plans and other expenses. And in my opinion, one of the most important ones is the product pipeline. Plans for new vehicles, including more affordable models, remain on track for the start of production in the first half of 2025. These vehicles will utilize aspects of the next generational platform as well as aspects of our current platforms, and will be able to be produced on the same manufacturing lines as our current vehicle lineup. That is really positive, as it means they will not have to build new facilities for these next generational products. And this is really positive for Tesla to be doing lower priced vehicles, as in the United States they have now announced they're going to be removing the EV vehicle allowance tax, which in turn isn't a benefit for Tesla, but they are countering this with these lower priced vehicles. And this hasn't came into force yet, so people might still want to be buying these cars in between Q3 and Q4, as this might be their last chance to get this tax benefit. So Q4 profits could be relatively high. So looking at the quick stats for Tesla, we can see a price to earning ratio of 93.56, that is really good, and an earnings per share of 3.63, which is also really good. So there is room for this stock to grow into within the market price. I do believe it will grow into this room within the next year easily. And from there, the roof could just continue to rise and it just continues to fill its own boots. With Tesla ranking 22nd in the S&P 500 on a scale of PE ratios, this is relatively good, especially for saying it's such a large company with such a good fundamental grounding within the S&P already. It's still got much more roof for growth according to the PE ratio. So looking at a liquidity ratio for Tesla concerning the last 5 quarters, we can see a really positive liquidity rate. So in Q3 of 23, we can see a rate of 3.18, that is just outstanding, and this year's Q3 was 2.63, which is down from last year. However, that is not a concern as debt is up due to the R&D being so high at the moment. Their total cash was actually improved from the last year similar quarter, so that is not a concern. This is really important as it shows the liquid cash to debt ratio, as you want to be able to pay back your debt in liquid cash for at least $1 of debt per cash, as you can't be selling your assets. In the world of business, cash is quite literally king. So the retention rate for Tesla is quite interesting. This shows how much money falls out of the business due to cost. So in Q3, similar last year, we can see a retention rate of 7%, and this year it is 8.6%. With Q4 of last year being at 31%, that is just ridiculous. Typically, you want to see a business around 10% mark, so this is not a bad thing for Tesla in the slightest. In fact, it can show good growth for Q4 this year, being that last year's Q4 was so outstanding. So it will be interesting to see if Q4 this year follows in the same footsteps. Now moving on to free cash flow for Tesla. This is basically free cash in which they have at the end of each quarter, in which can be used to spend on dividends, stock buybacks, or paying down debt. In last year's similar quarter in Q3, they had a free cash flow of $849 million, And in the last quarter, just announced they have $2 billion, nearly 3 in free cash flow. It is important to say that all these numbers are in thousands, so you need to times it by 1,000. With a anomaly of Q1 of this year, they were down $2 billion in free cash flow, but then they bounced straight back up, so that is nothing to be concerned of at all. So moving over to TradingView, looking at Tesla on a logarithmic chart, we can see on an Amiga ratio they have a rating of 1.77. That is relatively good. It's not amazing, but it's hard because the price is so high at the moment, but they do still have boots to fill, so it is reflected in the price. And when we go to look at the Sharpe and Saltina ratio, this measures the potential upside to the potential risk of the stock. This is currently down minus 3.93%. So according to this, it is not a good time to buy short term, but that is very short term looking at these sort of ratios that it was within the next week or so. So if you're looking to hold Tesla long term, it shouldn't be an issue as their outlook is really good. So when comparing Tesla to BYD, we can see that Tesla is currently absolutely smashing them. Furthermore, this uptrend seems that it will continue as it doesn't seem to be showing any sign of slowing down. With their growth not being anywhere near as impressive as Tesla, however, their earnings per share is still 12.53. That absolutely smashes Tesla's one, and their P ratio is 20, which is much worse than Tesla's. BYD, of course, being the Chinese competitor to Tesla, so they do have a big stake in the EV market. It is important to note, though, with Trump's promised tariffs, BYD will not perform in the US market anywhere near as well as Tesla will, so that will be interesting to watch going forth comparing the two stocks. Looking at Tesla on Google Trends, we can see that this is a relatively stable search term. This is kind of important to note as it shows the demand for Tesla to an extent. Of course, it can be Googled for anything, but it does show demand in the search terms. Its interesting regions are Norway, Denmark, Canada, United States, and Sweden. So that sums up Tesla stock and where I believe it will go in the future. I do see it being a really stable stock long term, maybe within the next month or so, not so much. However, I am not worried about that in the slightest. I do currently hold Tesla stock and I will continue to hold it as I do see long-term upsides being quite great as they have quite big boots to fill already. So for that reason, I give Tesla a rating of a B. This is just due to the risk to return being so good long-term. Short-term, I would give it possibly a D, I would say. I think within the next month, it could be quite volatile. It'll be interesting to watch, but that is my opinions on Tesla stock after looking through the news and the financials and their Q3 statement. Let me know what you guys think about Tesla stock in the comments below. I'll be very interested to read them as I won't get many comments anyway. I think my average comments are 2 per video, so that's great. With that being said, I'm trying to hit 300 subs by the end of the year, so if you could subscribe, that would be greatly appreciated. Yet again, I'm not a financial advisor. These are just my own opinions, and I will see you for the next video.